So today we're going to dig into a really fascinating company, one that's built its entire business, a massive business, around a simple but powerful idea, serving the customers that traditional banks often just leave behind. This is the story of Aavas Financiers and how they are banking the unbanked.
Okay, let's just start with this question. Think about it. What if the real path to huge success wasn't about fighting over the same old customers, but about going where others see nothing but risk? Aavas has grown its assets to over 20,000 crore. That's well over $2 billion by doing exactly that. So the real question is, how on earth did they pull it off?
To really get what makes them tick, we first have to break down their unique business model. And it really is a carefully crafted blueprint designed specifically for the unbanked and underserved corners of India.
All right, so who are we talking about here? Who are Aavas's customers? Well, it's not the big city corporations you might be thinking of. Their bread and butter is in semi-urban and rural areas. And get this, about 60% of them are self-employed. We're talking about small shop owners, local artisans, entrepreneurs, basically people who often don't have the neat and tidy income documents that mainstream banks always demand.
And this, right here, is the heart of their entire mission. They call it banking the unbanked. You see, they are intentionally going into this gap in the housing finance world, reaching a niche market that the big players have, for the most part, completely overlooked. This isn't just some clever marketing slogan, it's the entire reason the company exists. So you're probably wondering, how do they manage all that perceived risk? Well, it all comes down to one word: discipline. Aavas is incredibly specific about what it funds. They stick to small home loans with an average size of just under 10 lakh rupees. That's around $12,000. They're not touching big, speculative loans for developers, and they pretty much steer clear of risky, under-construction properties, preferring to finance homes that are already almost finished. This systematic caution is absolutely key to their stable growth.
Okay, so with a model this different, what does the market think? As you can imagine, it sparks a pretty lively debate among investors. Is this whole thing a stroke of genius, or is it a really risky bet? So on one side of the argument, you've got the skeptics. This comment from an online investor forum, it really captures a common worry about companies owned by private equity, or PE firms. The fear is that these firms push for super fast, maybe even unrealistic growth so they can cash out quickly, and that, of course, could put the company's long-term health at risk. But then you have this, a totally confident statement from Aavas's own CEO welcoming their new PE partners. He's not framing it as a risk at all. He sees it as a massive strategic advantage that's going to fuel their next big growth spurt. It creates this fascinating tension, right? You've got the outside perception versus the internal confidence.
Now, while smaller investors are debating this online, some of the big players, the major institutional investors, they seem to be placing their bets. For example, a firm like Marcellus, famous for its super rigorous Kings of Capital framework, has actually added Aavas to its portfolio. That is a huge signal of confidence in the company's fundamentals and its vision for the future.
Okay, so let's peel back the layers and take a look inside the engine room. How does Aavas actually make this whole model work, day in and day out? Well, the data reveals a machine that's really built on three things: efficiency, stability, and trust. You gotta picture this. A few years ago, Aavas was running on more than a dozen different clunky systems, so they decided to go for a massive tech overhaul with Deloitte. They brought in world-class platforms, Salesforce for handling the loans, and Oracle for the core banking. And the result of this huge digital transformation, they literally slashed their loan turnaround time in half, from a sluggish 13 days all the way down to just 6.7. That is a massive leap in efficiency. Now let's talk about stability. There's this thing called the capital adequacy ratio, which is basically a measure of a company's financial cushion. Regulators say you need a minimum of 15%. Well, Aavas is sitting at 44.5%. That's nearly 3 times the required buffer. It shows they are in an exceptionally strong and resilient financial position, totally ready to weather any economic storms that might come their way.
And here it is. This is the number that really makes people sit up and pay attention. Their gross non-performing assets, which is just a fancy way of saying bad loans, is just over 1%. Now, to put that in perspective, that's way lower than many big mainstream banks, let alone other lenders in this specific segment. For a company that's lending to a supposedly risky group of people, that is a powerful testament to just how good their process is.
So how in the world do they keep that number so incredibly low? Well, their collections framework is this really smart blend of high-tech and high-touch. Sure, they use AI models to predict risk early and have digital portals for easy payments. But the foundation of it all is human. It's about proactive, respectful communication that's focused on building trust and finding solutions, not just hammering people for money. Which, brings us to the bigger picture. Is Aavas just a super efficient financial machine, or is there something more going on here? Let's explore what seems to be their real endgame, the idea of achieving profit with a purpose.
And look, their commitment to social impact isn't just talk. The numbers show they're actually doing it. In just 1 year, they spent over 11 crore rupees on social responsibility initiatives, planted more than 13,000 trees, financed almost 350 green homes, and installed a ton of solar capacity at hospitals. This is a real, tangible investment in the communities they serve, and that builds a kind of trust that pays dividends way beyond the balance sheet.
And this is what puts a human face on all those stats. This quote is from a case study in their annual report about a man named Nanalal Beal. It just goes beyond the financial metrics, It shows the real-world, life-changing impact their work can have on families, and that creates a really deep sense of loyalty. And this is how they frame their ultimate goal. Notice that dual focus. Delivering value to shareholders is explicitly tied to uplifting every life they touch. For Aavas, these two things aren't in conflict. In fact, they believe they reinforce each other. A trusted brand in the community naturally leads to better business and ultimately more sustainable returns for everyone.
So, what's the big takeaway here? Aavas has built this incredibly powerful, profitable model by serving an overlooked market with a whole lot of discipline and empathy. They're making a really bold bet that having a purpose isn't just good for society, it's actually good for the bottom line. The question we're left with is, in a world full of economic uncertainty, is that a bet that will continue to pay off? Definitely something to think about.